A very good morning. Welcome to Power Breakfast. We are in the Mumbai News Centre. I'm Nigel D'Souza and with me, Anisha Jain. Morning, Anisha.
Morning, Nigel. Well, yesterday the markets were a lot volatile, but we ended above the 50-day moving average. And today the cues are steady. Crude is at $60 and positive comments about the US trade tension as well.
Let's kickstart the show then.
Okay, let's kickstart the show.
All right. First check on the Asian markets. They start off on a bit of a positive note. Investors out there, they're waiting for the all-important meeting between the US President Donald Trump and Chinese leader Xi Jinping later this week. For starters, the Nikkei is holding with the gain of around 0.7%. That's more to do with the yen move. That's moving gradually towards that 114-odd mark. So that's pretty good news for that market out there. But even the other few markets, they're opened up more or less flattish. Now you have the Kospi that's moved to the low point of the day, sitting with a cut of around 0.2%, while the Straits and the Taiwanese index, some mild green just to kickstart trade. Pulling up the SGX Nifty though, that's indicating maybe we'll have a green start. A 20-point bump up is what we could brace ourselves for.
Okay, so start above the 10,700 mark. That is what is SGX Nifty suggesting. But in the US markets, the stocks bounced back from early losses to close higher after National Economic Council Director Larry Kudlow said the White House was having a lot of communication with the Chinese government at all levels. Now, this is ahead of the meeting between Trump and Xi Jinping at the G20 summit later this weekend. The Dow rose over 100 points and the S&P 500 gained 0.3%, while the Nasdaq ended flat. CNBC's Kate Rogers gets us a wrap of all the action on Wall Street.
U.S. stocks mostly higher today, the Dow adding 108 points, the S&P up 8, the Nasdaq flat. President Trump lashing out at General Motors again today, tweeting that the administration is considering removing all subsidies from the automaker after it announced yesterday that it would cut thousands of jobs and halt production at several U.S. plants. GM shares sliding better than 2% after that tweet. GM later issuing a statement saying it's committed to manufacturing in the U.S. and defending its restructuring plans. Meanwhile, top White House economic advisor Larry Kudlow speaking to reporters about trade tensions with China today, saying the president is not pleased with progress made on those talks. Kudlow adding that the decision to issue any future tariffs on Chinese imports will be made by President Trump, although he said the U.S. will continue working with China as the G20 summit approaches. And industrial heavyweight United Technologies announcing plans to break up its businesses. UTX will split into 3 separate companies following its $30 billion acquisition of Rockwell Collins. That split should be complete by 2020. Shares down 4% on the news. That's the action from the U.S. market. Back to you in Mumbai.
Well, on that note, let's get in some important opinion coming in from Mohamed El-Erian on the possibility of the Fed raising rates, the state of the U.S. economy, and how the U.S.-China trade tensions could end.
Slowdown is overseas more than in the U.S., particularly in Europe, and there are concerns about China. So the main worry is that we get spilled back onto the U.S. economy. So far, the U.S. economy on a standalone basis is fine, but the U.S. economy cannot overcome headwinds from the rest of the world forever. My view from day one, and I've said this and you guys have covered it, is 3 hikes is what I thought they should do this year. They ended up signaling 4 and reiterating 4. So between what they should do and what they end up to do, there's a big difference. It is very hard for the Fed right now to go back to 3 hikes for this year. If they don't, the market is going to say, wow, the economy is much weaker than we anticipated. Or the Fed is much more open to political intervention than we thought. So I think the Fed has put itself in a bit of a box, and they're going to have to go through with 4 hikes. But my preference from the beginning of the year was 3, and then see how the global economy evolves. Not just the U.S., but the global economy.
Okay, so that's Mohamed El-Erian saying that probably the Fed has put itself in a bit of a box. Definitely one of the big triggers for the U.S. market is the December meeting of the Federal Reserve. But President Donald Trump has once again said he is not a little bit happy with his appointment of Jerome Powell as the chair of the Federal Reserve. Now, in an interview to the Washington Post, Trump said he thinks the U.S. Central Bank is way off base with what they are doing. Hear out what David Lebowitz of JP Morgan Asset Management and Jurian Timmer of Fidelity Investments are expecting from the central bank in the month of December.
I think what you're seeing is that the Fed is taking a look at the world, and they're looking at the interaction of fiscal policy and the economy and kind of this global dynamic. And they're saying, you know what, growth looks pretty good, but we think growth is going to slow back down next year. Inflation is really not a problem. I mean, even when you look at that wage print of 3.2% from the most recent jobs report, when you factor in productivity, that's consistent with inflation around 2. And so I think what the Fed is saying is, look, we think growth is going to be okay. It doesn't really feel like inflation is going to be a problem. We're getting very close to our estimate of neutral. So perhaps over the next couple of months, they'll begin to signal some sort of pause. That's been our view all along. And I think maybe a hike in December, 2 hikes next year brings them to neutral. And then we get a little breath of relief.
The Fed has much more cover now to, not stop its hikes, but to slow them down and maybe instead of 5, as the dots suggest, maybe go to 3 or 4. And instead of doing 4 over 6 quarters, they do 3 over 8 quarters. And one lesson that we've learned over and over in this rate of change world is that less tightening is the new easing, right? So in 2016, the Fed kept tightening, but it slowed down its track, and that was enough for liquidity conditions to ease up, the dollar to come down, and the markets to reflate. If the Fed does the same thing now, I think that would be a significant lift for the market in 2019.
All right, then turning attention to the European markets, they ended mildly lower yesterday. Investors monitored developments around Brexit as well as the Italian budget plans and whether or not the Italian government and the European Union can come to a bit of a conclusion. The European Commission out there, they have been debating for the last couple of months. President Trump's comments on China, that as well weighed on sentiment in yesterday's trading sessions, where all those 3 markets that ended in the red. You pull up the Italian index as well. Remember the previous trading session, that was up more than 2.5%. In yesterday's trade, that market did give back some part of what it put down.
Okay, let's shift focus now to the world of currency space because the dollar has strengthened to trade near 1.5-year high as risk assets rout back amid conflicting signals on prospects for de-escalating the China-US trade dispute. The yen, however, weakened against the dollar index currently holding at the 97.4 mark.
Turning attention to the world of commodities, and Brent crude prices hover around the $60 per barrel mark. That, in fact, has been weighed down by uncertainty over the US-China trade war and signs of increased global production. However, losses are capped on expectation that the crude exporters would agree to a cut at the upcoming OPEC meet in Vienna.
There is concern in the market out there that, President Trump is going to lean very heavily on the Saudis to do nothing. But frankly, I think it's in the Saudis' own domestic interest to pull these barrels. I mean, they essentially oversupplied the market over the summer, and now I think they're going to have to pull those barrels back. A million is essentially where we're going to start from in terms of a cut. I think the question is, do we get up to potentially 1.5 or higher? But I mean, my base case is they pull.
Well, back home on the Wall Street, the Nifty recovered nearly 1% from lows to end just shy of that 10,700 mark. Sensex closed more than 150 points in the green, while the mid-caps traded in line with the benchmark indices, with the index ending with gains of 0.5%. The banks ended with a gain of around 0.3%. Now let's go across to Sonia Chana, who is joining us with the cues that are set up for trade this morning. Sonia, good morning. There's not much to complain for the bulls this morning.
Yes, there isn't. In fact, a lot of positive cues. The markets have been inching higher for 3 straight days now. And this morning as well, global cues are positive. The Dow was up in the green. There's an expectation of a trade truce between the US and China, and that has kept markets quite buoyant. Even for our own markets, crude has resumed a downtrend. It fell yesterday, although this morning it's slightly higher, but it's still around that $60 per barrel mark. And for us, it's been a 3rd straight day of buying, both from FIs and DIIs, so that's the positive. FIs bought 800 crores in the cash markets yesterday. DIIs bought about 30-odd crores, and the Nifty ended above that 50-day moving average as well. This buy-on-dip strategy remains intact, although it has been a few very volatile days. It's F&O expiry tomorrow as well. Let's see which way things go. We also have the added benefit of the rupee appreciation. So yesterday, despite a volatile day, the rupee by the end appreciated to about 70.79 or so. The outperformance with respect to emerging markets continues. So in November so far, the MSCI India index is now up 7% versus the MSCI Asia and emerging market index up about 1.5 to 3% odd. So let's see the SGX Nifty also indicating a positive start.
All right, Sonia, so that's about trade setup. What about the stocks you're looking at?
Well, there was quite a bit of delivery-based buying and a lot of heavyweights yesterday. So Infosys saw 500 crores of delivery buying. HDFC Bank saw 500 crores of delivery buying. You could see some pressure in Lupin today because the CFO, Ramesh Swaminathan, has resigned. So, there could be some turmoil over there. PSU banks could be in focus. The Finance Ministry has said that there's no plan to infuse any more than the budgeted capital into PSU banks. So remember, some of these banks have rallied in anticipation of additional capital. Maybe there could be some pressure there. Moody's has downgraded Yes Bank's rating to negative, so that stock could continue to be under pressure. And Bharti Airtel news reports indicating that the company will raise 15,000 crores in equity, and they're planning a 30,000 crore war chest in 3 tranches. These, of course, are reports, so perhaps Bharti Airtel could be in focus as well.
Okay, thank you so much, Sonia, for that list. So a lot of stock-specific action may be lined up for the day ahead in terms of Yes Bank, Lupin and the likes.
Well, the liquidity battle between the government and the Reserve Bank of India continues to rage on. Now, the government is claiming that liquidity constraints are crippling growth, but the central bank released data to claim that credit growth remains healthy. Now, the Reserve Bank of India, their data showed that the credit growth in fortnight ending October 26 was at 15.9%, and the fortnight ending November 9th, it remained steady at around 15.6%. The Reserve Bank of India also released data to show that loans by NBFCs saw a growth of almost 18% in the first quarter of this fiscal, and it improved even further to over the 20% mark in the second quarter. Responding to the data, Economic Affairs Secretary Mr. S.C. Garg told cnbc TV 18, and I quote, "The NBFC problem started only in September. Therefore, we need disaggregated monthly data for assessing its true impact." End of quote. We in fact spoke to experts on what they make of this report. Let's listen in to what they had to tell us.
Clearly, the issues remain outstanding. And by the way, it's not just about liquidity and credit growth. It's also linked to the other 2 issues which were discussed in the 19th November board meeting, i.e. relaxation of strictures on the PCA banks, as well as around restructuring of loans to the MSME sector, all of which are linked to liquidity. All it tells us is that the battle lines and the differences between the RBI and the government endure even today. Nobody seems to have arrived at a compromise as yet, and therefore watch the space. But by the way, the statistics which the RBI has released is obviously right. Money is available in the banking system if it is required. Banks are sitting on excess government securities. They can convert them into cash and lend them where required. I think the problem really is certain names are probably finding it difficult to find liquidity. It's not really a systemic issue. It's probably an idiosyncratic issue. And I guess that's the point that RBI is making. In that, you can't dispute the numbers given by the RBI.
Figures given by RBI are not correct, but apparently they are a little dated. The NBFC sector, which was become a major lender to certain sectors, particularly real estate and certain other consumption-related sectors, would have definitely their credit growth would have slowed down after September, if not exactly gone into negative. They have, it's a common knowledge that they have sold portfolios to banks, and they have agreed not to lend even a single rupee additional because they have to watch their own balance sheet and they have to see that they don't default on their CPs or other liabilities which are coming up for redemption.
Sticking with more news coming in from the RBI chambers, days after the 9-hour RBI board meeting and the friction with the government over several contentious issues, Governor Urjit Patel deposed before the Parliamentary Standing Committee on Finance. Now, from the state of the economy to the autonomy of the central bank, sources say the governor was quizzed on a wide range of issues. Rituparna Bjorn is here with the latest. Rituparna, over to you.
This is the third time since June last year that Urjit Patel has briefed this same panel of parliamentarians, which is headed by Veerappa Moily, and he was quizzed on several issues, right from demonetization to the state of the economy, NPAs, credit growth, as well as the recent friction that we saw between the Reserve Bank and North Bloc on issues like autonomy and reserves. Now, as far as the state of the economy is concerned, Urjit Patel told this parliamentary panel that prospects look bright as far as the economy is concerned, because the RBI believes that that crude prices will be on a downward trajectory, and this will benefit the economy. As far as credit growth is concerned, the RBI believes that it's robust and is seeing a growth of around 15%. As far as demonetization is concerned, Urjit Patel said that the impact was transient on the economy. But on other issues like autonomy of the Reserve Bank, on reserves, etc., he did not provide any answers. But according to sources, many of these queries which were raised today will see the Reserve Bank getting back to this panel through written answers, and these written answers will be given in the next 10 days. With that, it's back to you.
Well, on to a CNBC TV 18 exclusive then. Manisha Gupta caught up with Vikram Limai, the MD and CEO of NSE, and Mr. Limai says that asset management industry has come a long way and believes that India is well positioned to counter global volatility. Take a look.
You have only about 5% who are invested in equities, and that 5% includes direct and indirect. So it's a very small percentage. The emerging market average is somewhere between 13 to 15%, and the developed markets are more in the 30s and 40s. Right. So we have a long way to go even in terms of equity penetration in India. And equity, you know, relatively speaking, is a well-developed asset class in India. At least our markets are relatively well-developed, and you know you have liquidity and depth and all that. But it is only 5% in terms of penetration. So we have a long way to go.
And with the generations getting more smarter as we see every new one, and as we keep talking that it is the millennials who are going to rule as we go forward from here, what is the reason that you feel that the number is still so small, and what is the kind of push that is needed to ensure that more and more people come into this and invest properly or smartly?
You know, it's like I said, there's always an inflection point. You have to keep working at educating people about markets. You have to have the right products. So, you know, SIPs didn't exist 10 years ago. So my point is, people need to be educated. People need to have a positive experience when they invest in markets. You have to have simple products. It's very difficult for the common man to understand complex products. So you have to have products that you can communicate effectively. People are able to understand. And you have an inflection point. I think we are at that point where people are a lot more comfortable about markets. A lot of effort has gone in from all participants in the market to educate investors, and we're seeing the fruits of that. So my hope is that that will continue and penetration levels will improve. But financial education is an ongoing exercise. So I think we continue to do that. Just as an example, for instance, the NSE conducts more than 2,500 investor education programs in about 500 districts, which is, 90% of the country. So that is required, because I think, as I said, penetration is just 5%. To grow the markets, you have to penetrate more, and you have to get more people to invest a portion of their savings in markets. And that, I think, the younger generation is more comfortable doing that, because they've grown up in an environment where their access to information, their ability to understand markets because of various tools that are available at their disposal is a lot easier than what it was 15, 20 years ago. And the risk-taking ability is obviously a lot higher. So from that perspective, I think we have to keep at it. And my hope is that these penetration levels will pick up.
How are you looking at the exchange now moving on from here?
Like I said, we have a long way to go in terms of where we are versus where we need to be in terms of market development in this country. And my own view is that if we don't get market development right in a relatively short period of time, unfortunately, we don't have another 10, 15, 20 years. If we don't get it right in the next 2, 3 years, I actually believe we would be compromising on the long-term growth potential of the economy. If we want to grow at much higher growth rates than the 7% that we have, then we have to get market development right. Because you need alternate sources of capital, you need financial instruments that allows people who are operating in the real economy to hedge risks, whether it's credit risk, interest rate risk, equity risk, commodity risk. And therefore, you require those markets to develop, you require those instruments to be available for businesses to be able to hedge risk. And I don't think you can grow at much higher growth rates just on the back of bank financing. And we all know that the banks are also quite stretched in terms of asset quality, capital, and all that. So I think from that standpoint, it's important to get market development expedited, and that's what we're focused on.
Well, let's get straight to the big corporate story then. The promoters of Yes Bank, Rana Kapoor and Madhu Kapoor, they have drawn up a draft proposal for mutual reconciliation. CNBC TV 18 learns that the proposals include Rana Kapoor dropping his appeal against the Bombay High Court order, which granted Madhu Kapoor the right to nominate directors on the board, if certain conditions are met. Ritu Singh joins us with more details on that. Ritu, take us through the details of this 9-point draft proposal.
Well, it is a big breakthrough for the efforts to reconcile the warring promoters of Yes Bank, Madhu Kapoor and Rana Kapoor. A 9-point plan has been put to paper for discussion between the two promoters for mutual reconciliation. But this is only a draft proposal. So what does it stipulate? First, of course, if all of these points are met, which are in the draft, Rana Kapoor will drop the court case against Madhu Kapoor, where he challenged the Bombay High Court order that gave her the right to nominate directors on the board of Yes Bank. Both Rana Kapoor and Madhu Kapoor would, according to this draft proposal, have the right to nominate 3 directors on the board of the bank. One, both Madhu Kapoor and Rana Kapoor individually could appoint, and the 3rd director will have to be jointly appointed by both of these Indian partners. Further, the director that will be appointed by both Madhu Kapoor and Rana Kapoor separately will not be liable for rotation as per the Articles of Association, and he will be a non-independent and non-executive director by nature for both of them. But there is a caveat for Rana Kapoor's appointment. He says that if the RBI and the shareholders approve his own appointment as MD and CEO or non-executive chairman on the board of Yes Bank, then that will supersede this, and he will remain on the board of the bank. And further, Madhu Kapoor and her family would at all points of time give her consent to Rana Kapoor's such position on the board, of course, subject to all the necessary approvals. Beyond this, the draft plan also proposes that both the promoters jointly can exercise their right to appoint a chairman as well as a managing director, and lastly, a whole-time director on the board of Yes Bank. But as I said, these are all draft proposals, and the real talks will now begin with negotiations on both the sides. And if a reconciliation is really reached, it is going to be positive news for Yes Bank.
Oh yes, thank you Ritu for that. Meanwhile, the Yes Bank stock ended with cuts of over 2.5% yesterday after ratings agency Moody's downgraded the ratings and changed the outlook to negative. Now, the report cited corporate governance concerns and implications of the upcoming management transition on growth strategy of the bank, which could also constrain the bank's ability to raise new capital. Moody's has also raised the issue of NPA divergence, and it says any further divergence noted in FY18 will be seen as credit negative. Now, the outlook has been revised to negative after taking into account the uncertainty relating to the bank's asset quality and profitability performance, and in particular, any adverse findings from the RBI's risk-based supervision report.
Well, on to some election news then. Voting will be held for the 230-seat Madhya Pradesh Assembly today, and it's a pretty tight race between the BJP and the Congress. CNN News 18's Manoj Sharma brings us this report.
Well, Madhya Pradesh is going to polls, and more than 5 crore voters, they are going to decide the fate of 2,899 candidates. But this is simply an arithmetic. This is essentially an election for the selection or rejection of Chief Minister Shivraj Singh Chauhan, who is seeking the 4th term in row to become the Chief Minister of MP. And he is pitted against former Union Minister Yadav from Budni. And Kamal Nath and Jyotiraj Scindia, though they are not in the fray, but this is also a prestigious election for Kamal Nath and Jyotiraj Scindia. And both of of them are member of parliament from Gwalior and Chhindwara respectively. And there are so many candidates who are they are considered as key constituencies, like son of former Madhya Pradesh Chief Minister Digvijay Singh. Jayavardhan Singh is in the fray from Raghugarh, from their traditional seat, and brother of former Chief Minister Digvijay Singh, that is Lakshman Singh, he is in the fray from Chachoda. Nephew of Digvijay Singh, Priyavrat Singh, he is in the fray from Khilchipur. And also nephew of former Prime Minister Atal Bihari Vajpayee, Anup Mishra, is in the fray from Vitarwar. And one important contestant in this election is son of BJP General Secretary Kailash Vijayvargiya, Akash Vijayvargiya. He is in the fray from Indore 3 constituency of MP. So this is an election, and all the preparation has been done by the Election Commission, and there are security arrangements. More than 1 lakh security personnel, they have been called from neighboring states, and they have been deployed in sensitive area, and some 17,000 booths have been identified as sensitive booths, and special security arrangements have been made over there for the free and fair polls.
Well, a quick check on the Asian markets. The Nikkei continues to hold on to gains. It's up close to around 0.5%, so it's holding on to some gains. But the other few markets, the Kospi has dipped into the red. Even I think the Shanghai market, that the first tick was in the green, that as well has moved into the red. So let's pull up the Shanghai as well as the Hang Seng should come up for you. Some red on the screen out there, though the SGX Nifty continues to suggest that in fact we are bracing ourselves to the positive start. Maybe a 20-25 point bump up is what we could brace ourselves for. But moving on then, let's talk about stocks. Lupin will be in focus today as its CFO, Mr. Ramesh Swaminathan, stepped down yesterday in fact. Ekta is with us. Ekta, came as a surprise?
Well, definitely, it has definitely come as a surprise, but it's not something which is completely untoward or, something which is completely controversial. So, yes, Mr. Ramesh Swaminathan has been with Lupin since the past 12 years. He's been a CFO, I understand, for 2 decades or 2 decades, but he became a synonymous name in terms of representing Lupin. So, he was the key person to talk to, etc. And hence, that's why it's come as a surprise, because he was one of the key people that investors as well as, say, the media interacted with. So he, to a certain extent, became the face of Lupin. Separately, I just want to add that yesterday, when the resignation came in the evening, it took everybody by surprise, because Mr. Ramesh was in fact interacting with investors as well as, select media the whole of yesterday. So it wasn't, there wasn't any sort of whiff of anything that could have happened in terms of a resignation. So I think that's what got everybody on the back foot, that this resignation came as a surprise. But was it because of an internal strife? No, my sources tell me that in fact Mr. Ramesh Swaminathan is looking to pursue opportunities outside pharmaceuticals, and that we should probably know about those opportunities very soon. I just want to point out that, in the past also we've seen these kind of transitions take place, and the one which comes to mind the most prominently is Umang Vora, who is now the CEO and heading Cipla. He was the CFO at Dr. Reddy's for a very long time. So this is probably a transition which would be, quite natural for somebody like Mr. S. Ramesh. But since he was the face of Lupin and, people associated him with Lupin quite distinctly, I think then it would probably come as a bit of a negative for Lupin. Separately, it also points to the fact that maybe opportunities are dwindling a little bit in the pharmaceutical space as compared to earlier, because of the kind of challenges the generic companies are facing.
Okay, Ekta, so not necessarily any controversy there when it comes to Lupin, but yesterday there was some controversial note on Sun Pharma as well, and that's the reason the stock was under pressure yesterday. Some clarification coming in from the company now?
Well, yes, there is a clarification which is coming from Sun Pharmaceuticals with regards to all of, with regards to the news yesterday. They have mentioned that, all of this information in fact is dated. It goes back around 10 to 15 odd years,
and they understand that someone has compiled and circulated information about Sun Pharma. The info is already available in public domain at this point, and it's portrayed to indicate that something inappropriate was done. A lot of the information is 10 to 15 years old, so it's dated, and Sun believes that they are in compliance with legal and regulatory provisions. So this is the clarification which is coming for Sun Pharma, but the point about the clarification also is that they haven't denied any of the allegations or any of the details within that report. So I think maybe that could weigh or continue to weigh on sentiment. And separately, reports indicate that Sun Pharma is closing its Cranberry plant in New Jersey. The company has pointed to a lot of cost-cutting initiatives, etc. So this would be in line, but there would be a layoff of around 100 workers, and this would be something that would now culminate.
Okay, all right. Thanks so much for that, Ekta. Well, moving on then, power, shipping and sugar companies, they have challenged the Reserve Bank of India's February 12 circular, and the case is coming up for hearing today. Lata Venkatesh joins us to run us through all those details. Morning, Lata. Run us through those details.
Well, just a brief background. If you remember, the February 12th circular, passed on February 12th this year, said that identified about 30-odd companies which have loans over 2,000 crore and are stressed, and said that if they're not resolved in 6 months, they will have to be taken to the NCLT. Many of them were power companies, and in various courts they had challenged the Reserve Bank's circular. Shipping companies, more notably I think Reliance Naval, had also challenged, and some sugar companies had also challenged. The Supreme Court decided to hear all those cases together, and that is the hearing that's coming up today. It was already heard on November 13th and then pushed for the next hearing now. At the moment, the circular is stayed. But the Supreme Court on that day identified 3 kinds of cases. One set of challenges were challenging the validity of the IBC, the bankruptcy code itself. The other set were challenging the constitutional validity of the February 12th circular. And there were power companies which were not challenging the validity of the circular, but merely asking for an exemption for themselves. Now, today, the hearing of all this will start. It may take a couple of days or more because there are quite a few litigants. But it's just that all those who are challenging, both on terms of constitutional validity and in terms of the exceptions they seek within the circular, will be heard today. There is no order. All the litigants are going to start their presentations today.
Okay, Lata, thank you so much for that. So maybe we won't hear the final verdict on that, but an important case that we need to track. Moving on then, the high-pitched battle for Essar Steel continues. The case will be heard in the Ahmedabad today to hear pleas of various creditors against Arcelor's bid. The promoters of Essar Steel are likely to make a last-ditch attempt to rescue the company. Well, let's just focus to the world of derivatives, and Manglam Malu, as always, joins us with the cues coming in from the futures and options space. Good morning, Manglam.
Good morning, Anisha. A day ahead of expiry. The important cue is coming in from the cash markets. Over the last 3 days, both the FIIs as well as the domestic institutional investors pumping in money in the cash market, and that is floating our boat. So if you take a look at it, yesterday too, 812 crore worth purchased by the FIIs in cash markets. However, in index futures, there was a fair amount of unwinding, which was witnessed in intraday yesterday itself. While the Nifty was moving higher, the Nifty November futures, 2 days ahead of expiry, turned into a discount from a premium of around 10.6 points. And that's telling you that there was selling. Later, the data confirmed that. So close to around 705 crore worth selling in index futures by the FIIs. Majority of that was long unwinding. Close to 10,700 contracts were unwound. The long contracts were unwound. Perhaps some money being taken off the table after a 200-point rally that we've seen on the Nifty itself. In index options too, the cues were perplexing. Both the long calls as well as the long puts unwound their positions. That's telling you that there was a fair amount of choppiness, also muddled with the fact that there was expiry. So maybe some of them were adding positions in the next month's contracts or not. That said, you have to keep an eye out on the fact that we're at a precarious position right now for the Nifty, just above the 50-day moving average, but above the 20-day moving average and below the 200-day moving average. So those are important levels we'll be watching out for. Watch out for the put-call ratio ahead of expiry. It's at 1.74, the highest that we've seen in this series so far. And we saw a fair amount of put writing at 10,650 and 10,600. That's telling you 10,550 to 10,600 could be a bit of a support. The one stock I'm watching out for is DHFL. It comes out of F&O ban ahead of expiry week, and there is a fair amount of news flow around that stock too.
Okay, all right, Manglam. Thanks so much for that. Let's shift focus into the commodity space. Manisha Gupta joins us to tell us what's going on there. Hey, Manisha, good morning.
Hey, Nigel. Good morning. Thank you for that. Well, we have the Jerome Powell statement coming in today in the evening, so the markets will be keeping a focus on that, on whether there is anything that we get to hear on the U.S. Economy, on the interest rate cycle, etc. So that would be an important cue to watch. In the meanwhile, you have seen the crude oil prices steady a bit after that very sharp decline that we saw in the previous week. So this week, more or less, has been about holding the kind of levels that we are trading on right now. While, yes, there is still negative cues in the sense of supply increases from the producers and the kind of money that has been pulled out of the derivative market in sense of crude and also by the hedge fund managers. But this market as well will continue to keep an eye on the G20 summit on 30th of November. This is by the end of this week. And then, of course, the OPEC meeting on 6th of December. So ahead of these two important cues, you wouldn't look at too much of a price movement coming in. The markets, of course, will continue to watch out for cues. One quick word on the metal space, where we have seen yet another day of decline come in. So it's a fourth day now where you have the industrial metals continue to decline. Markets would want to watch out for the Chinese economic data that would be released tomorrow morning. And ahead of that, this space as well is looking at very low volumes right now.
Okay, Manisha, so metals as well as commodities holding steady ahead of the G20 summit. But from the world of commodities, let's move back to the world of equities. And Sonal joins us to tell us the stocks that might react to reports, news as well as brokerage action. Sonal, good morning. Over to you.
Good morning, Anisha. Well, a lot of stocks will be in focus today. Reliance Capital will be in focus because of the Q2 numbers that the company has reported. Good set of numbers coming in. The company reported a profit of around 280 crores versus a loss that it reported last year. The AUM growth is good. It has come in at 5%. Loan book also grew about 20% on a YOY basis. The asset quality has also improved. It reported gross NPAs of 3% versus 4.3% on a YOY basis and net NPA at around 1.4% versus 1.7% on a YOY basis. Other stock that will be in focus is Axis Caves Engineering because the subsidiary has won a big contract that is amounting to around $20 million. That equals to around 140 crore rupees. Dredging Corp will also be in focus because the company has informed the exchanges that they have received in principle approval from the cabinet to let the government divest all its stake in the company, that is around 74%. Well, other stocks that will be in focus is because of the brokerage action. Kotak Institutional Equities has written on RBL Bank. In fact, they have downgraded the stock to a sell from ad. They have a target price of 500 rupees per share. They do not think there is any further upside available for the company and there are no further positives at the current price levels. Arvind has been in focus because of the demerger news. Now, Axis Cap thinks that the demerged entity's fair value will be around 157 rupees per share. They are penciling in a revenue CAGR of around 12% for the company. And for FY19, they're expecting a revenue of around 7,400 crore rupees, EBITDA of around 830 crore rupees, and profits of around 320 crore rupees for the company. Back to you.
Okay, all right. Thanks so much for that, Sonal. Well, on that note, we'll wrap up on Power Breakfast. You stay with us.